day, American Rounds this week relapse. I'm Vav Govender, and as usual, we do yourself in a macro segment and then end with a segment on technology. In our macro segment this week, we're going to cover the state of the US election, and I think we'll do that every week until the election date on the 5th of November. By the way, I will be doing a special election seminar the week before the election, just giving an update on the state of the race as well as what the impact on your investments might be. Then we look at China. The latest stimulus has come through, but the market I think is still hungry for more because we are seeing some issues with regards to underlying factors in that economy that are still making it quite vulnerable. And then we look at US interest rates. We had inflation numbers coming out, and as well as Fed minutes, and to a certain extent we are seeing a bit of a change in the odds around rate cuts in the next rate meeting. Then in our tech segment, we're going to focus on Tesla. Today is the 10th, as I record this, of October, and we're going to have a big announcement this evening on Tesla, and I'm just going to talk about that company and what it might, mean going forward in terms of its valuations, in terms of Elon Musk's approach to politics, etc., and as well as his types with some of the other parts of the Elon Musk empire. So let's start off with the US election. State of the race right now, according to public polling, that means polling that's done by newspapers and done by sites that announce what the results are going to be, is in favor of Harris, though it's very close. I think the popular vote is 3% in our favor, but that's pretty much break even for Democrats. They have to win by more than 3%. They win by 4%, they're probably going to win the election. They win by 2%, they're probably going to lose the election. That is the negativity of being a Democrat in the US. Then, in looking at the private polling, however, there was an article in the Wall Street Journal showing that a senator in one of the swing states had done private polling about the state of the race, and it showed that in actuality, even though the public polling showed Harris as an advantage, the private polling showed her at a disadvantage. And there is similar kind of polling coming out of many of the swing states. In fact, if you looked at the overall situation in the swing states, it does indicate that maybe Trump is a bit stronger than the public polling indicates. The second thing is that we must look at the fact that the trend is obviously important, because the election, like I said, is on the 5th of November. Yes, some people are voting early, but a lot of the voting is going to happen on the 5th of November. And so if there's an even race right now, but one candidate is going down and the other one's going up, by the time there is an election, it might be not so much an even race. And the trend right now, if you're looking at towards the overall race, does look to be towards Trump and away from Harris. Harris has had a number of good, positive events that have occurred in the last few months. Obviously, after she announced the entry into the race, everyone else dropping out and basically supporting her. And the media's to the disadvantage she gets from being the Democratic nominee is obviously a good thing for her. Then there was the election, it goes to the debate with Trump, which was rather bad for him and reasonably good for her, as well as before that the convention that was also really good. The Democrats are able to bring out a lot more stars, for instance, than the Republicans are, and that really kind of gave a bit of a boost as well. Not huge, but like I said, this is a race of 1 or 2%. So 1% here, 0.5% there, all that added up. Unfortunately for her, there is no more events until the election. There is a move to try and have another debate on the 27th of October, but many are saying that Trump won't do it because it doesn't benefit him. The trends are in his favor. Why would he go and try and risk it after the disaster that was his last debate? Kind of makes sense. At the same time, Harris basically has had some missteps. There was a 60 Minutes interview that was quite bad. And she's also trying to go out and, do kind of podcast kind of things with, people like, there's a podcast that's very popular called Call Her Daddy. She's done, Howard Stern, those kind of people on radio. She's trying to do a bit more media out there, but it really hasn't helped her as much as she would like. On the other hand, Trump has been also on the podcast circuit with a number of comedians like Andrew Schultz, etc., and that seemed to be working a bit better for him. So it does look right now like the race is maybe balanced, if not slightly in Trump's favor, and the trend is more in his favor than not. Again, we don't know for a fact that this is going to be the outcome of the election, but right now it looks really good for him. Then, moving on to China, we had the China stimulus a little while ago, and that helped stocks go up quite nicely. It was a very large package the government put forward to try to stimulate the economy, to try and get things running a bit. Unfortunately, already after like a couple of weeks, that effect has run out. This indicates that the market can be fooled a little while, or can be encouraged a little while by some positive just sugar from the government, but sugar rush from the government, but it's aware of the fact that there are long-term issues in China that have to be solved. And without those long-term issues being solved, you are going to continuously have to have these stimulus packages coming through to support the market. Otherwise, it's not going to be a good situation. And I think the market right now is actually looking for another set of stimulus. I mean, just speaking today on the 10th, like I said, we had a 500 billion yuan fund coming to play. That was announced, I think, about a month ago in September. That helped things a little bit, but the market's already looking for the next handout from government, next bit of sugar rush from government. And I think that until you have the underlying situation in China solved, which is basically the issue around trust in the Chinese government's running of the country, belief in growth in that country, and who knows what they can do about the demographic situation, I think we are going to have a downward trend, even if it's punctuated by small stimuluses and positive events. Then let's have our big discussion around interest rates. This week, the US Fed minutes were released, indicating that it wasn't a unanimous choice to go and look at a 0.5% cut. There were debates around it, and the idea of cuts being another 0.5% going forward is basically, I think, optimistic to say the least. Once this happened, you saw that the chance of no cut for the US go up dramatically from almost nothing to I think 14% or so. This is obviously not a great situation for the US market, because we kind of building a lot of expectations around rate cuts in, and if we don't have these cuts coming in as strongly as expected, we might just see a bit of a pullback come through. And then we also had inflation numbers from the US as well. Inflation still fell from 2.5 to 2.4, but the expectations were 2.3. So it's above expectations. We saw core higher than expected. We saw a number of different indicators indicating that inflation may still be falling, but it's slowing down at the rate of the rate is falling, and we may have difficulty getting to the 2% target that the US Fed has set. If that is the case, the Fed is going to be very reluctant to go and be very aggressive around cutting. And in that scenario, I think the market may have built in too much expectations for rate cuts, and that would obviously indicate that some of the rate cut rally, as we say, might be have to be reversed. Obviously, that is an area of concern. And the same thing, at the same time, we had these inflation numbers coming in. Also had jobless claims coming in, which were also higher than expected, which is kind of the worst situation to have, which is basically inflation higher than expected and more evidence of a slower economy. That is the worst situation. Why? Because the rates are higher than expected, the Fed doesn't want to be cutting. But if the economy is slower than expected, the Fed should be cutting to help that economy out. And so it's a situation the Fed can't really help the economy because it's been prevented from doing so by high interest rates. And I think the high interest rates are a big issue. Still, I think that the US housing market, the US car sales market, the US overall economy is starting to feel the pinch of these high interest rates. And unless we can have them reversed reasonably soon, I think it's going to cause some problems for them. And the Fed, I think, wants to reverse them if it can. But it's being hampered by the fact that we are seeing the situation around inflation remaining particularly high. And just to add around the inflation number, we saw oil prices, really go up in the last week or so, as tensions in the Middle East started to rally, or started to increase. I think the oil price increase may be temporary, especially if the tensions can die down, but it could also not be. I think there's real evidence that we are heading towards a bit of an escalatory cycle between Iran and Israel, where each one doesn't want to be the last one to be attacked and not do anything about it. So if you attack Iran, they will attack Israel. If you attack Israel, they will attack Iran, and back and forth. And every time it happens, there is the danger of escalation, and I think that is something to be concerned about. If we do see an escalation in the Middle East, oil prices will go up significantly, and a lot of the assumptions about rate cuts, I think, will disappear because we will have inflation return with a vengeance. Now, moving on to Tesla. So we're getting this Tesla announcement this week, and if you've seen all the ads out there, it says We Robot. Now, I don't just have the announcement in front of me, so I can't obviously talk about it. But I want to talk about Tesla overall and what that company is looking like at the moment. So, for those that don't know, Tesla is the most valuable car company in the world. More valuable than Toyota, more valuable than VW, more valuable than GM or Ford. In fact, you could add all these companies together and they would not be as valuable as Tesla. That's how much value the market is pushing into Tesla as a company. Now, if you had all the big car companies in the world together and you have one company that's worth more than them, also in the car industry, you would assume it would make a lot more cars than everyone else. That's not the case. Tesla is in fact not one of the biggest car producers in the world. It produces a lot of cars. One of its models is very popular. But compared to the overall sales of a GM or a Ford or a VW or a Toyota, it's not in the same league. So why is it so much more valuable than all these companies? In fact, all these companies combined. It's because of Tesla's valuation as a tech AI company. Now, what does that mean? Well, an AI company, a lot of what you want for that company, what you expect from the company is in the future. Tech companies are often about future growth as opposed to current profits. And Tesla is playing this game very well. I mean, it makes cars, makes them profitably, unlike some other producers in the sector like Rivian, but it doesn't produce enough cars, it doesn't make enough profit them to justify the valuation. The way the valuation is justified is by the idea of the future of Tesla, which is things like the robotaxi, which is things like the Optimus Prime robot, and whatever else can be dreamed of by Elon Musk. And we need to see some of this coming to fruition. And that's why this particular announcement today from Tesla is going to be so important. I will discuss it in more detail next week, but we need to see some proof that some of the promises that Tesla has made over the last decade plus are going to turn into reality. Now, if this is true, if we are having the robotaxi, we are going to have the Optimus or whatever it may be come out, then Tesla could be worth multiples of what it is right now. Yes, it's very valuable for a car company, but for a tech company, it's a fraction of the value of a Google or a Microsoft or a Apple or a Nvidia, let us say. And we could easily see this car company become significantly more valuable. It basically is no longer a car company, but just a tech company, maybe a robotics company, maybe a taxi company, who knows exactly what. But we need to see that happen. And without that happening, I think that Tesla's valuation at the moment is pretty high. So yeah, let's just see what the announcement looks like this week. And if it is real, I will talk about it again next week. Thanks for joining me. I look forward to speaking to you guys again next week. Cheers.